Good evening, everyone. I welcome all of you tonight at our event, Swiss Crypto Valley, an attractive haven after global banking failures. The event is organized by Crypto Valley Association. My name is Olga. I'm the co-chair of Western chapter of the CVA, and I'm really excited moderating this panel tonight. We have 60 minutes panel. For everyone who joined us, you can put your questions on the chat box so we can address them later to our fantastic experts. And before diving into the topic, please welcome our four amazing panelists. Today we have Alexander from Dukascopy, we have Jan from Fiat24, we have Cedric from Ernst & Young, and Pavel from PLL Legal. So I suggest we start with Alexander. Our first panelist is Alexander. He is head of the fintech at Dukascopy Bank. So Alexander, the floor is yours.
Yes, hello everyone. Thanks for having me. It's a true pleasure to participate at the CVA events. I'll start with a short intro, and then I'll just share a couple of slides to demonstrate on, basically two projects, two Swiss projects, crypto-related, where Dukascopy Bank is involved as a partner. But the introduction first. So we are a Swiss bank based in Geneva, active in the digital banking and digital brokerage. So the digital banking is my responsibility, and we offer our services to retail customers. So we have a large retail customer base, corporate and institutional clients. We call ourselves a crypto-friendly bank. We have several projects in the crypto domain. To mention one of them, we became the first bank, I believe, globally that issued tokens, that basically tokens by the bank. So this project started, I think, back in 2019. And we are also offering services to startups in Switzerland, and also crypto startups. And I'll just share a couple of slides to tell about two of such projects or as a demonstration. Yeah, do you see my screen?
Yep.
Yeah, so I'll try to be short. So the first project is basically a stablecoin project. It goes beyond the stablecoin concept. It's effectively a marketplace, a Swiss marketplace for e-commerce, where the company, which is called Centi, invites the service providers in Switzerland and also consumers to become part of the ecosystem that they develop, and basically for consumers to use the e-commerce services from companies. And this ecosystem is powered by a stablecoin, a CHF stablecoin that Dukascopy Bank helped to issue as a guarantor, backing up this instrument. It's basically at the first, so we have a Bitcoin Swiss stablecoin that was the first privately issued token in Switzerland, but that is more like an investment instrument. Well, it's an instrument for a larger players. The idea of Centi is to create a purely consumer type of a token, which they can use in to buy just regular stuff, from the newspapers to some online services inside Switzerland. We believe that this is an interesting project, and jumped into that as a supporter, but also as a backer of this company. You can Google them to read more about the idea. Here it's a short plan where you can see that we basically issued, our role is to issue a guarantee against the client funds, that are deposited with the bank. And based on this guarantee, Centi mints tokens that can be used by consumers to, buy goods and services inside the ecosystem. The project is truly interesting, and for those who love crypto and want to learn about real project in this space, I strongly advise to take a look. It's run through an app, so you can download the app and try for yourself. I'm not sure how many, so they started recently. I'm not sure how many companies they already have in their marketplace, but I believe it's already growing. The second project that we are backing is a partnership with a crypto exchange that is called Smart Valor. It's a crypto exchange that is based in Switzerland and Liechtenstein. And it's also the first one to have its stocks traded on at an exchange. So they have listed their stocks at Nasdaq. And the way we collaborate with Smart Valor is that, the scheme may be a bit sophisticated, but the idea behind it is that we basically share clients. So the clients who are onboarded with Dukascopy Bank, they can also open their account at Smart Valor Exchange, link the accounts together, and then use their bank account effectively as an escrow to buy and sell crypto with Smart Valor. So their funds will always be protected. Obviously, the insurance, the deposit insurance is covering the funds at the account. But at the same time, they can fully instantly buy and sell or trade crypto with the exchange. Likewise, the customers of the exchange can do the same. They can open an account at the bank and also trade crypto using the funds at a Swiss bank. So this is also a fully real project. It's been ongoing for I think a year or so already, so you can try for yourself. That's it for the intro from me.
Okay, thank you. Thank you for your presentation. So we can continue with Jan. Jan is co-founder of Fiat24. Jan, please feel free to introduce yourself.
Hello, everyone. Good evening. It's a real pleasure to be invited to present tonight. My name is Jan. I'm the co-founder of Fiat24. Fiat24, in a nutshell, what we are doing is that 90% of Swiss banks are using either Finova or Avalog as core banking system. And for smaller bank like us or financial institution, we cannot afford such big software. And we have built an in-house core banking system. But unlike to traditional software, 95% information are stored on-chain because we are focusing on the payment module. And the blockchain or distributed open ledger technology by nature is very suitable for client bookings. That's why we moved all client booking from the server to blockchain. And the advantage of using blockchain as the medium to book client ledger is that we can ensure atomic exchange, meaning that the double spending problematic can be 100% avoided. So it's increased our efficiency and reduced massively our running cost. And since we are booked on public blockchain, specifically on Ethereum and layer 2, we can theoretically run by 24/7 and without any human intervention. So it's kind of a set of smart contract ensuring the whole banking logic running properly. Yeah. So the team has 8 people in Zurich, and we have last week we have launched our credit card. So it's a Visa card. When you swipe the card by buying anything, and this transaction will be stored on blockchain. So on Etherscan, you can check this transaction, and you don't have to worry about the server or double spending. For example, 2 people are swiping the card simultaneously. This kind of situation are very difficult, very challenging for traditional core banking system, but we solve this with blockchain solutions. Since we are built on blockchain, so we are crypto native, and you can also convert your crypto into fiat money. The liquidity is given by Uniswap rather than, for example, centralized liquidity providers like Coinbase or Kraken. I assume Credit Suisse are using multiple liquidity providers like Bitstamp and Kraken or those centralized exchanges for converting A token to B token. But we don't have that. We don't have even API to any centralized liquidity providers. Everything are built on top of Uniswap, the decentralized exchange. So whenever there is a transaction initiated by client, it will be wrapped in a smart contract, and searching the perfect route on Uniswap and sold to the B token. So by doing so, again, we have reduced dramatically our running cost. Going forward, we will be offering Swiss IBAN, international bank account number, like the bank account number you and I have with Credit Suisse or UBS or Dukascopy. So this IBAN number will be forged into an NFT. So the NFT will be your IBAN number. So this NFT, since it's a ERC 721 token, this NFT is automatically on blockchain. So meaning that we try to create the link between blockchain information and a Swiss IBAN so that the fiat money and crypto asset can be bridged in this way. So this is what Fiat 24 does, more or less. Yeah.
Thank you. Very, very interesting. Thank you. Thank you, Jan.
Yeah. Well, we do hold a Swiss fintech license. It's also governed by bank law. They call us 1B bank because it's one. So 1A is the normal bank, and 1B are the fintech banks. But we consider us rather as a technology firm.
Okay. Okay.
Yeah.
Interesting combination.
Yeah.
So we can continue with Cedric. Cedric is senior consultant in legal, regulatory, and compliance in Ernst & Young. Cedric, please.
Thank you, Olga. And also thank you to my fellow panelists who have taken the time out of their busy schedule and obviously their dinner as well. Yeah, I'll just quickly introduce myself. So as Olga said, I'm working at EY in Zurich, and yeah, I have a business and legal background. I really try to focus on helping clients in the traditional space, but also in the crypto space. So I say probably I do about 50-50 traditional to crypto. And so we at EY really try to advise businesses from A to Z. So we start off with really just getting to know businesses from the smallest businesses, like let's say even like Yang was a 1B license, to like the biggest banks, like the UBS, which we audit as as the auditing company of UBS, right? And within EY, somebody seems to have disappeared. Hopefully he'll come back, Yang. But anyway, let me get back onto schedule here. Yeah, so we advise a lot of different companies, and we really try to take a holistic view. I don't have any fancy schmancy slides like some of my colleagues here this time. I'll leave it because usually all I'm doing is PowerPoint. So, but people know EY, and we're here to basically advise, but also enable trust. And it's a very tricky and a delicate situation because there's no right or wrong. There's nobody that's in the entire industry that's like fully compliant or doing everything perfect. So my company is working as a gatekeeper to establish trust, and also making sure that we're constantly improving. And again, there's no right or wrong, or nobody doing everything 100% perfect. So mistakes will happen, and I think with the backdrop of like the financial crisis, and I mean the crisis within the last year, especially in the banking, but also in the crypto world, things will continue to happen. And different players, from the people that are from the consumers to the financial intermediaries like Yang and other banks, like Alex's, and also the people that are consulting. We need to focus on having a good quality product and a good quality of service that we're offering to our customers, because I think that's the most important thing at the end of the day. We need to have trust, and people need to be able to trust that what we offer, especially in Switzerland here, where we're a very advanced jurisdiction, we need to make sure that there's a high quality at all times. So yeah, so from my end, I really do a lot of different things. I won't get into all the details. Some of my specialities are in AML law and investor protection. I do a lot of audits in that area. And I also help businesses really develop from start to finish. And we help developing the business model, but also doing the licensing and all this, so like the traditional legal stuff. And we also do like the tax on top of that, cybersecurity, etc. So I hope I haven't bored anyone just with this quick intro, but I guess I'll pass on to Pavel, and he can introduce himself.
Yes, thank you very much, Cedric. First of all, guys, I didn't want to prepare any presentations, but then I decided to do that especially for Cedric, because I used to know that he's not going to do his homework. So I have some slides. These are good news. And I will share this with you. Just give me a second, please. Yes. Here we go. So PLL Legal effectively is a law firm, as you see. It's an international law firm based in Switzerland. We have a number of associate offices: Abu Dhabi, in Dubai, in Milano, in London, in New York, and a number of other locations in the world. So we're trying to be one-stop advising on compliance, on regulatory, on licensing, not only in Switzerland, but also in Luxembourg, for example, or in Hong Kong. The topic of our webinar, just to emphasize that here in Switzerland, we could do a little bit more, and the Switzerland actually could continue to be an attractive safe haven for not only for the crypto businesses, but also for your assets. I would like to get to another slide just to show you some basic information about the bank failures in brief. So here we can see the summary from the US Federal Deposit Insurance Corporation, illustrating the amount of banks and bank failures from 2001 through this current year. So you can see here on the screen, I'm not sure if it's large enough, but oh no, So it's the maximum amount of those failed players was registered in 2008. It's global financial crisis. Then we also see quite substantial amount of bank failures in 2009. Still, there is a positive trend going to zero reduction of bank failures in 2017-18. And here it's a markup done by one of my friends and colleagues on social media, showing that in 2023 we have three bank failures, and here in the chart we can see the total assets in millions and also the amount of total banks collapsed. It's currently updated, so currently we have 3 banks collapsed. And why it's challenging us and why it's sometimes difficult to digest in terms of understanding the implications of what's happening for the international financial market is that, first of all, from my standpoint, the amount of crisis is not understood well enough. So it's much more in a number of those crisis situations that we are currently in the midst of and going through. It's not only one crisis, it's not only a crisis in America, and possibly the most pessimistic scenario being that this would trigger a much larger domino chain effect due to the high interest rates, not only in America, but also consequently all over the globe. And why it's not only one crisis? As we all know, the one of the main reasons behind this all of the 3 bank collapses was named the poor risk management practices. So it doesn't mean that this or another bank was not regulated at all. They all had their licenses and they're still active. And some of the banks were back, some of the banks were bought, but the last player was bought by Morgan Stanley, so the license is still active. But it means that they didn't pay enough attention to the risk management practices and the effective implementation. But on paper, they were following all the requirements. I believe the accounting statements were also not that bad. At the same time, this happened, and it triggered some negative consequences for the end customers and investors not only in America but also abroad. So why it's not only one crisis? We have the same problems in crypto. We advise a lot of traditional businesses. We advise appeal illegal. We advise startups. We advise Fortune 500 companies. We advised entrepreneurs, we advised crypto exchanges, crypto businesses, intermediaries, financial investment funds, etc. So it's not me to emphasize that we are sort of, criticizing crypto here on the background of the global, possibly the global financial crisis, or at least American domestic crisis. But we have the same questions, we have the same issues here. I think all the panelists would agree. So it's the problems of market integrity, violations of IML, CTF rules by the crypto players. We have the issues of market stability. We have the issues of too connected to fail issues such as with the Alameda and the FTX. We have the customer and investor protection issues, again, with FTX, with investment funds, crypto investment funds, with numerous other crypto players who get bankrupt. So it's not only one crisis. From my standpoint, at least we're here speaking at least about 4 different crises. So the first being the American, or let's say international, well, national, but in numerous countries, banking crisis. The second one would be the crypto winter crisis, which is currently still we're in. It's a high volatility on the crypto markets in 2022, 2023 that we are still currently experiencing. So this might be the second crisis, and the third one would be the lack of market integrity and financial stability, and the last one would be the issues of the 2 most important issues for any financial market, which are also applicable here for the crypto ecosystem, which is the customer and investor protection. So it's a much more complex problem that we are dealing with. And here we need to see what exactly we mean by crypto ecosystem, what exactly Swiss Crypto Valley is offering to ABCD framework of technologies. So that classification is not that precise. It's a right classification. I really like it, ABCD, but it doesn't include machine learning and biometrics. So please take a note on it. So ABCD technologies, artificial intelligence, blockchain, cloud, big data, machine learning, and biometrics are behind fintech, techfin, and regtech business models. So these are the main three business models known to any professional who advises and works on in the crypto business, particularly in Crypto Valley, Swiss Crypto Valley, advising these companies. If with fintech, I think everybody knows what we're talking about as far as it's all over the press, and basically most of the people would call any company involved with one of those technologies as a fintech. It's not exactly correct, because we also here can speak about techfin companies, technology firms expanding to offer financial services to a wide array of clients. We all have seen the recent offers of credit card by Apple online. So now you can also order a credit card by Apple. Young been providing our Swiss alternative to Apple. So it's a credit card by Hire24. And big companies, including Facebook and other companies, they also try to enter this field of expanding, offering financial services, as in addition to being a social services network. We all know about these examples, as far as Libra was initially established in Switzerland, planning to expand globally. So it was also one of the interesting moments, as far as Facebook is a very big company, and they decided to come to Switzerland and not to Singapore or not to Hong Kong to embark on the journey of offering the techfin solutions to the respective clients. At the end, these plans were effectively curtailed, but this was not because of Switzerland, as we all remember. It was because of the regulatory scrutiny in the US, first of all. Secondly, I think it was not that clear for the American regulators what are those traditional forms of transferring, expensive forms of transferring money into Africa would they cease to exist, or would they continue to be on the market? And also, it's absolutely unclear how you can regulate GAFAM or BAT business with Apple Pay. Well, in Apple credit cards, it was a long journey, but still, it's happening now. At the same time, with Facebook, it never happened. So I think that there was a regulatory scrutiny, first of all, in America and States, and Switzerland been always proposing the best and the most clear regulatory terms for Libra to come and work not only in Switzerland but also abroad. So generally, being a Swiss law firm, we of course would like to welcome foreign companies and foreign virtual asset service providers to redomicile in Switzerland, or to set up a startup or any other branch of financial services company, financial intermediary in Switzerland. We would be pleased to be of assistance to this.
Say amen to that.
Yeah. But just a quick note. I'm not sure how much time I have, so I'm just wrapping up the introductory part. I would like to emphasize that it's very important that every slide is so important. Cedric, you're mentioning it. You see, I told you it would be interesting. So the fourth industrial revolution currently ongoing and happening. It's the first industrial revolution in the world affecting the field of financial services. So this is very important. So never ever in the world, including the first you see on the screen, the second, the third industrial revolutions, they never affected the financial services sector. So this one is really a key point. It's a turning point, sorry, in the history of industrial development and development of financial markets. Initially designed as a linear system, but ultimately being spontaneous orders as a spontaneous market. So briefly on key conclusions from all the previous crises and all the previous difficult financial crisis and difficult situations in finance. From my standpoint here, we could conclude that for the crypto wallet and for Swiss companies, for foreign companies who would like to open an office or representation in Switzerland, it's very important to see and to pay attention to how well technologically wise your solution is structured, because it should provide at least some possibility for auditors or for experts to assess and to see how your technology works. Second important issue is that the privacy and compliance framework, how this would be structured. They would be structured as privacy by design or privacy by default. And of course, we would recommend to structure it as privacy by design. It does when initially you incorporate some particular issues, some particular elements in your technological solution, allowing you to follow the privacy guidelines, allowing you not to violate the current legislative provisions worldwide. Secondly, again, in Switzerland, as has been emphasized on the Libra example before, tackling regulatory and tax uncertainties would not be that issue of a paramount importance as for states or many other countries. At the same time, we think that we might need to get some additional clarity on particular provisions or their applications regarding regulatory framework or tax framework, especially for distributed ledger technologies in Switzerland and abroad. This might be, and most likely it will be conducted in conjunction with liberation in the general elaboration of risk management practices and the risk management agenda in Switzerland and in Europe, as well as worldwide. And the last remarks are more of a general nature, is that we need to classify the risks if we want to address them in the right way, if we want to see the Swiss companies, Swiss startups, Swiss big companies developing on a good scale. We need to see and to address the risks, and how we address these risks. This would affect effectively the remedies available and the action plan. So from my standpoint, they should be, and in most cases, assessed as micro level risks within the category of operational risks. And there are new categories, of course, they're also available. So and this is completely new. These are internationally related risks. And the last one is that's the, I think we could add it as a motto to Swiss Crypto Valley Association work. We need to stimulate growth of new business models and technology-centered economy as a new rationale behind most of the regulatory initiatives. Why I'm mentioning this? Because I'm a strong proponent of regulation being able to shape and being able to drive forward the innovation, and not stifling it, but driving it forward. And it goes in contrast with some other standpoints, especially my colleagues in America or even in Europe, in most cases would disagree, saying that regulation or extensive regulation or regulation in general would stifle the innovation. But regulation not, but over regulation or absence of clarity with regulation, yes, it would not be having a positive impact on developing the innovations.
Thank you, Pavel. I'm sorry to interrupt you. Let's maybe thank you for your intense introduction that gives us the full picture of what's going on now. And maybe now let's be a bit more focused on the topic of our discussion today. Of course, till a certain extent, it has been inspired by these recent events in banking sector, the one you mentioned also in the US, collapse of a few US banks. And of course, it resulted some significant uncertainty within business environment, and investors and crypto companies are confused and they don't know what to do. And according to the publication from CNBC, all of these US companies turned to crypto-friendly Swiss banks. And basically the topic and the goal of our panel today is to discuss what Switzerland can offer and what the main advantages of Switzerland as crypto-friendly jurisdiction. And Pavel correctly mentioned that, of course, the clarity and the transparency from regulatory perspective, it's a strong advantage. But still, maybe like without going into details about the reasons of this bank's failure of Silvergate, Signum, SVB, why do you think there is a minimal risk or maybe even no risk that of the same similar scenario in Switzerland? What would you advise to your client? I don't know, maybe Alexander, let's as a practitioner, let's maybe start with you.
Yeah, thanks a lot. Well, I believe that largely the reason for it, of course, no one is insured against scenarios where there will be global crisis if the regulators won't be able to tackle it fully. Well, now we see how yet another case, a large bank was sold to even larger bank, to JP Morgan. But well, spillover effects can definitely be there. However, I think the main protection of Switzerland in this case is that Swiss banks, the vast majority of Swiss banks, they are involved in a different business, right? So they are mostly into the private banking. And therefore, for them, it's a bit less chill. I mean, the exact risks that popped up in front of the US banks currently, they are not common for the vast majority of Swiss banks, and the Swiss banks that actually do this commercial business, issuing loans and taking deposits, they are government-owned for the most part, or state-owned. That's why the worst that could happen to Switzerland, I suppose, did happen with one of the two giants. Well, actually, was fused into another. Now we have basically a monopolist in the banking market, which I believe is not the best scenario that could happen, because all smaller banks, including Dukascopy bank, we are dependent on, or used to be dependent on, two largest banks. All the banking infrastructure in Switzerland is dependent on, or used to be dependent on two. Now it's only one, and obviously it didn't get any simpler, right, to manage these relationships. I'd say this is a large challenge. So the risks are a bit different. The spillover effects can still be there, because what we see in the US, that businesses and then the population, they just they do not understand the reasoning. The regulators try to explain something, no one really wants to learn, wants to understand it. So whenever there is a signal, people just rush and take their money out. That's also a very sensitive and quite bad situation for global banking. in the banking industry, or in the banking universe, you do not make fun, or you do not applaud when your competitor goes down. it's always bad when competitors go down this way, because the spillover effects are quite strong in the industry.
Okay, thank you. Jan, do you have something to add here?
Yeah, sure. I mean, I agree with Alex, and I think the Swiss banks has a totally different business model compared to the American colleagues, and they are more investment bank centric, and securitization plays a big role in the American market. And if you don't manage the risk properly, and you will end up with over leveraged. And different to American bank, I think most of Swiss banks are either cantonal bank, serving the local people, and with very, very simple bank services like account, money transfer, this low risk, and mortgage, those low risk products. And there are another good percentage of banks that they are doing private banks. So even though they are managing a huge amount of money, but most of money are off balance sheet. They are managing it on behalf of their client. Yeah, according to the different risk profile of their clients, they have kind of a strength to manage their risk. Again, the two giant international banks in Switzerland merged to one. That creates certain risks even for financial institutions, because I think almost all Swiss banks are either using Credit Suisse or UBS for their corresponding banks and ensuring the foreign currency payments. Now there is only one choice, and it creates a little bit operational risks. And on top of that, the action taken by the Swiss government created a little bit uncertainty of the game rule. Yeah, so we get used to play the game, according to certain rule since at least few decades, and all of a sudden, and for whatever reason, and we change a certain rule, and it's created a little bit uncertainty to the market. But for me, I can understand the point of Swiss government to protect the Swiss domestic financial stability, but for international audience, there are some negative feedbacks. Yeah.
But talking more about crypto, or in general, any blockchain technology or crypto space. So
well, in crypto business, because we are in the business, so we appreciate that Switzerland has a very clear crypto regulation since very beginning. I believe the first guideline was issued back to 2015, the ICO guideline, and followed by stablecoin guideline, and then in 2018 there were a DLT law. Irrespective of the content of the respective regulations, whether it's friendly or unfriendly, right or wrong, but the fact that there is a clear regulation is still a very positive thing. It attracts a lot of companies doing business in Switzerland. Yeah, and then the second point is that while I believe that the crypto regulation in Switzerland make sense, yeah, and very reasonable, but still there are some minor points when you implement it. there are some things that we still can improve. For example, right now, especially the young generation get used to the neobanks or kind of mobile banking apps. And for this kind of bank, the onboarding in Switzerland or European wide are still very old school style. So it's designed for the traditional private banking industry. Client need to sign a lot of forms and to verify themselves, even though there are better technology which can ensure better data quality. And this kind of thing, I think we can implement as long as the method are reasonable. Yeah, because without the mobile banking or crypto technology, we take it for granted that bank need to be a building around the corner. Yeah, but given the development of recent technology, I think why should we have a bank just in Switzerland? Why don't we have a bank, in some other countries? So this is something that maybe in the future we will get used to. Either we like it or not, because the technology is there. So it opens the new possibility to, let's say, serve client abroad. Let's say, Swiss has been offshore banking central, since many decade or even century. And why can't we serve more retail client out of Switzerland rather than private bank style client? So those are my thoughts.
Okay, thank you, Jan, and thank you for this point to try to see on this question in comparison with other jurisdictions and other countries. In this context, we have a question from Q&A session, Q&A section. By the way, I remind everyone, if you have any questions, feel free to post them. We have just 12 minutes left, so we'll try to discuss and to cover everything. So the question is, the company going to build 3G generation, third generation smart cities, South Europe and Asia. And the company is going to operate in hybrid mode, fiat and crypto. And the question is, how can ecosystem in Switzerland help residents to secure their assets and operate in friendly mode in comparison with other jurisdictions like Estonia or Singapore?
Well, I have an answer, of course, I have. Well, thanks a lot for the question. First of all, it's a very interesting question. And Middle East and Asia, the topic is booming there now, the smart cities and genuine development. From my standpoint, Switzerland is also very good, as Jan been noticing, and the clarity of regulation and the other perks and benefits. But if you want, I would like to put forward an idea that some new forms of dominant product design are being developed and are being brought forward in Switzerland. These things might be challenging initially, and there might be something new, but like a QWERTY keyboard, if you remember before many years ago, or Intel chip or Microsoft DOS system, they were not that dominant at the moment when they were created at that particular moment. Currently, there is a dominant product design in keyboards. So most of them, it's QWERTY or QWERTZ, like in Zurich, in Germany, the German version, and some other variations. I will show you a slide, just a second.
I just remind that we have just 10 minutes left.
Yeah, so this is the dominant product design. So it shifts competition in any industry. It's a universal rule. and it's a QWERTY keyboard. It's an Intel chip. It was a landmark decision for the automotive industry. So first, when the product features are designed well, so there is one dominant product design, then it goes and it triggers complementary economics. And I think that the role of Switzerland, back to the question, could be just developing a new particular standard of crypto and fiat conversions and calculations, if you want, or settlements. That would be a golden standard for the other industries or the other countries to come. Also, Alex been possibly mentioning some very interesting cases of nearly dominant product design in terms of I had the pleasure to know that the companies Alex been presenting and talking about, and Smart Power and Bitcoin Swiss. I know them for more than 6 years, maybe 7 years, and they are also quite revolutionary in terms of providing that step towards a dominant product design being a typical Swiss product. So to emphasize, I believe that the role of Switzerland would be promoting and establishing a particular set of golden set of standards, but it's called dominant product design generally. So, and as emphasized on the slide, it means that terms of competition would be affected globally by what is created and done here at the Crypto Valley.
But going back to the existing solutions.
Yeah, well, but here, of course, this is the question of how these risks are perceived by the general public, because we're speaking about the cities, and if we're speaking about the smart cities in Asia, especially, or in other parts of the world, would it be Europe or America? It depends on how a particular citizen living in that city thinks and perceives that particular risk. So if we have a smart city built in China, then citizens being obliged to receive their salary in central bank digital currency would be having another approach to determining that risk. So would be thinking, well, if something would go wrong, how it's regulated. We want to see a very clear regulation and law regarding these statements. Or if I'm using a smart house technology at home, and if it was built and developed, I'm using crypto fiat services for paying for my utilities and etc., etc., etc. As soon as it's mandatory, it's becoming mandatory, guys, then it changes everything. And if we're speaking about the smart city, it's not just going skiing in the mountains. It's not that voluntary activity, because we should understand that these are people who, that there's safety conditions, a lot of restrictions, etc., etc., etc. So here, if we speak about the smart cities, we need to use this theory, perception of risk theory, to understand, as Professor Starr noted in 1969, to what extent actually we could use technologies, and what are that balance of technological risks and benefits actually, because the balance might be absolutely different. I would emphasize it very briefly, guys. On this slide, you see all risks, including those risks in the smart city, those risks with settlement, like T0 settlement procedures, risks of issuing a credit card by Apple, risks of issuing a Libra issuing payment system. They could be classified in accordance to this schedule, in accordance to this graph. So if you see this, for example, this factor 1 is a dread risk, and factor 2 is whether it known or unknown risk. So for example, take caffeine, it's here. So it's not that dread risk, and it's relatively known. So it's not that unknown as microwave ovens or water fluoridation or chlorination or something else. But take into account that that was drawn in 1980. I made some modifications to this concept of Professor Slovich, and I put blockchain somewhere here, I think now, and I'm publishing actively on that. But smart cities, they didn't think that topic didn't exist in 1980. Smart cities should be somewhere here on this graph, should be somewhere as the max unknown risk, and it might be very dread. The max dread risk we see here, nuclear reactor accidents, nuclear weapons fallout, right? So, but if you have a smart city and all the elevators stopped working, there is no lights, etc., you couldn't pay anything with your cryptocurrencies, etc. So I think we are able to identify that for smart cities, international development risk somewhere here, right? Maybe somewhere here next to the pesticides and mercury. So it's not that simple. So it would affect inevitably the classification of risk would affect the regulation of that risk. So of course, then we go to the another question of how we're going to regulate it. So here we again, as Young emphasized, that this is what's important, pace of policy making. Yeah, I remember the first presentation of ISO of FINMA guidelines in Zurich, next to the Bahnhofstrasse. I think it was one of those hubs. You know, absolutely, it was done in a timely manner. It was absolutely brilliant, interesting, and a very timely thing to do and to draft that legislation. But often the pace of legislation is just way too slow. So we couldn't align that with the speed of the digital economy. And well, soft laws, you know, it's good, but to a particular extent, and then at some particular moment we would need to see how a healthy hybrid of hard laws and soft laws would be used to build the legislative framework. So
it's not only the laws and regulations, it's also the ecosystem, right? Because
yes, I think the question was more even about ecosystem. And
because I mean, sorry, no, I just wanted to say, like, because it's, you know, he asked sort of, you know, what makes Switzerland attractive for smart cities. So I mean, I see what you were saying, Pavel, with there being, you know, the standardization. It's important. You know, we've set the standard here in Switzerland, and regulation is obviously important. And there's obviously always risks to something, right? But we need to think, you know, a little bit broader, you know, and it's not just, you know, saying, you know, we have regulation for one aspect. It's also about, you know, saying, you know, we have the competence, you know, like the digital literacy, with the experts that are here from, you know, from the IT to the business side, to the legal, to whatever else there you need, right? You also need to have a regulator that understands the business and is willing to talk to companies in the crypto area, right? So it's not like, you know, what's happening with the SEC in the US, where, you know, it's just regulation by enforcement. You know, here in Switzerland, if you talk to the fintech desk, you know, they'll talk to you and they'll give you feedback on whatever you actually want to you know, realize. And, you know, I think Yang can say a little bit more about that, you know. And he knows because he got the fintech license, right? So I think that's one of the biggest advantages to settling here in Switzerland, and having, you know, people that know what you know, blockchain is about, crypto is about, but also the classical banking and finance and whatever else comes into Web3, that's sort of, you know, being mixed between you know, the traditional Web 2 and the, you know, the Web 3, which is now, you know, swapping over from FS to non-FS, right? So it's a big ecosystem, and I think we, you know, there's a lot of other ecosystems that are up and coming, but you know, there will be we are in a great place to be right now.
exactly.
Yeah.
Thank you, Cedric. We are about out of time. Just to summarize, I suggest now all our panelists maybe to name just one characteristics of Switzerland that makes it outstanding country from compared to other jurisdictions, from this perspective of like what makes exactly it attractive during this uncertain period and banking crisis for crypto companies, let's say, or investors in crypto.
I just say it's openness, you know, for whatever is to come, and not, you know, having a rigid system that, you know, supports just like the biggest and the traditional people out there. And it's really, yeah, it's open.
Okay, Jan?
I absolutely second the opinion of Cedric. It's really open, and FINMA stick to their technology neutral approach, and they keep, of course, the core, the core problematic, which are the investor protection and money laundering. As long as, you know, as a financial institution, you can ensure those 2 points, FINMA are really open and supportive to the financial innovation.
Okay. Innovation also, yes.
Mm-hmm.
Pavel, Alexander, do you have something to?
Yeah, of course. Of course, I promised to Cedric, so I couldn't skip that part. So this again, guys, it's this legislation in Switzerland, it used to be technology neutral. It's not technology neutral anymore because we couldn't just stand on that point all the time. There is time has passed by. Now we need to regulate particular technological solutions. The recently adopted DLT law, if you haven't read my article about it, I do strongly recommend. It's an example of how the legislation is getting into the depth of the technological regulation. So here, what I would like to emphasize regarding your question, Olga, is that the question is here how to regulate this or another obstacle is entry and exit points. So the most typical for all the states would be to regulate entry or exit points, which means that access to the system, which is, you want to build a smart city, you need to get a license. You want to do a fintech, get your fintech license. You want to be a licensed bank, get your license. So it means that the entry point would be regulated, but how to protect it, whether this would limit the freedoms of the citizens. And in Switzerland, the legislative framework, the supervision framework, prudent regulation framework doesn't limit the freedoms, the individual freedoms, and protecting particular set of activities and business activities and entrepreneurships and innovativeness of the economy. At the same time, I would agree with Alex from Dukascopy saying that we would need to prevent monopolistic or even oligopolistic behavior. So if before there were 2 banks involved in the settlement and the international settlement of the accounts in Switzerland, now there would be 1 big player. So it's not that interesting. So as an action plan, I think we would need to employ a multidisciplinary, absolutely a new interesting perspective to protect startups, to make Switzerland and to continue to multiply the reputation of Switzerland as a place where a crypto company could come and ask for an advice or to relocate or to set up a legal structure or their main business.
Okay.
And this is for me, yeah, would be the most important part. I also promised that I would show you the picture that I used in making those slides. All the slides were containing a small part of that picture. And now at the end of the presentation, I would like to thank you, of course, all for an interesting time together, and as a small compliment for me, especially for Cedric, of course, because he was so concerned about that presentation.
I'm waiting for the
I would
NFT.
like to share this small picture for you to enjoy.
Okay. Alexander, do you have something to add? What one word difference?
Yes, I'd say that the benefit of Switzerland or the consequence of it is that you don't need to whisper the word crypto, you know, when you are speaking to a bank in Switzerland, unlike many other countries, even close to Switzerland. Yeah, so that's, I think, the great benefit, and the path that the Europe will have to take, and it will take years until they arrive to where Switzerland is today.
Okay. Yes, great. So to summarize, we have clarity, we have good regulations, maybe not ideal yet one, something still can be improved, but already way advanced compared to other jurisdictions. We have openness, we have innovation. So all these combination of all these factors makes Switzerland very attractive place precisely for crypto business also. So I want to thank our fantastic panelists for the experience and thoughts you shared today with us. And I want to thank all of you who find this time to join us this evening. And so please stay tuned for further CVA events. I believe we are running out of time.
Thank you.
Thank you.
Thank you. Bye-bye.
Thank you, guys.
Bye.
Thank you. I mentioned that when we started, there was only 230 people of participants joining us, but now the amount actually increased to 250. That's what I mentioned
Wow.
from the records, and I'm very impressed that those interesting conversations and slides, that of course they get your interest. So I think it's time for an apéro, guys. The weather is perfect again, at least in Swiss Romandie, where I'm now currently. So enjoy your evening and thank you. Thank you very much indeed. Thanks.
Thank you.
Bye-bye.
Merci. Au revoir.